Picture the pitch: a wrap truck, hand-painted logo, parked at a farmer's market with a line stretching past the flower stand. Your commute is 20 feet. Your rent is a parking spot. No landlord, no long lease, no walk. In freezer the size of a studio apartment. Just you, a griddle, and a captive lunch crowd with cash to spend on something better than a sad desk. Sandwich. That's the fantasy sold in every start-your-own-food truck video with a thumbnail of stacked $100 bills. Here's the version nobody puts in the thumbnail. It's 5:45 a.m. The generator won't turn over, the commissary kitchen closes in 15 minutes, and the health inspector who was supposed to come Thursday is standing at your window right now, holding a clipboard. On a Tuesday, the truck didn't lie, it just didn't tell you everything. Food trucks exploded in popularity because they solved a real problem for two different people at once. For diners, they offered restaurant-quality food at fast casual prices, with the novelty and social media appeal of eating off a truck instead of a table. For aspiring owners, they offered something the restaurant industry almost never does. A typical full-service restaurant build outruns anywhere from a few $100,000 up into the millions, once you count leasehold improvements, kitchen equipment, and the first year of rent before the doors even open. A food truck, by comparison, can get rolling for a fraction of that. That gap is the entire reason this industry exists. It's not that food trucks are more profitable than restaurants, it's that they're reachable. In a way, restaurant ownership usually isn't for a first-time operator with modest savings and a good recipe. The customer psychology matters too. People forgive a lot from a truck that they'd never forgive from a restaurant. A short menu, a cash-only sign, a wait in the rain, because the whole format reads as authentic and small-scale rather than corporate. That goodwill is real, and it's valuable. It's also the thing that gets exploited by every step into freedom. Be your own boss aid aimed at people who've never seen a commissary kitchen invoice. The market is intriguing precisely because it looks like the cheat code to restaurant ownership. It isn't a cheat code. It's a different game, with its own rules, its own hidden costs, and its own way of quietly bleeding an underprepared owner dry. Before a single burger hits the grill, the money is already gone. Start with the truck itself. A used step van, gutted and retrofitted with commercial kitchen equipment, typically runs somewhere in the tens of thousands of dollars depending on condition and how much of the build-out is already done. A custom-built truck from a specialty manufacturer, kitted out exactly to spec, costs substantially more, often well into six figures. Once every appliance, wrap and generator is accounted for. A trailer is usually the cheapest entry point, but it comes with its own towing and parking limitations that shape the whole business from day one. Then come the permits, and this is where new owners consistently underestimate both the cost and the timeline. A mobile food vendor permit, a business license, a health department plan review. Each one has its own fee, its own inspection, and its own waiting period that can stretch into months in a busy city. Most jurisdictions also require a fire suppression system for any truck cooking with open flame or a fryer, which means a certified installation and annual recertification running into the thousands. And here's the detail: almost nobody accounts for until they're already signing paperwork. Most health departments won't let a truck operate without a commissary agreement, a licensed commercial kitchen. The truck is based out of for food prep, cleaning, and overnight parking. That's a recurring monthly fee, often several $100s, that starts the day the agreement is signed, not the day the truck starts making money. Add commercial auto insurance, general liability insurance, and workers' compensation. If there's any plan to hire, insurance alone can run several $1,000s a year before a single truck door opens. Tally it up, and a realistically budgeted food truck launch. Truck, equipment, permits, first months of commissary rent, insurance, and a cash cushion lands well into six figures for most markets. All of it spent before the first sale. The business doesn't ease you in. It asks for everything up front and tells you to figure out the rest later. Strip away the wrap and the menu board. And a food truck is really a commercial kitchen that happens to have wheels, which means it needs almost everything a restaurant kitchen needs, just crammed into 200 square feet and bolted down so it doesn't slide during a left turn. The core cooking package, flat-top griddle, fryer, ventilation hood, is non-negotiable and expensive to install correctly, especially once the required fire suppression system is wired into it. Refrigeration is its own puzzle: a reach, in-fridge, and a chest freezer, sized small enough to fit the truck, but large enough to get through a full day of service, without a mid-shift ingredient run. Then there's power. Some trucks run off a built-in generator, others off propane, others off shore power at a fixed commissary or event site, and the choice shapes everything downstream. A generator is freedom. Park anywhere, cook anywhere. It's also a several $1,000 piece of machinery that needs regular maintenance. And when it fails mid-service on a Saturday festival, the truck doesn't have a backup burner to fall back on the way a restaurant does. The whole kitchen goes dark at once. Add a point of sale system with a card reader, a small monthly cost that adds up over years, along with fresh and wastewater tanks sized to code, propane tanks, and enough interior storage to actually hold a day's worth of ingredients without stacking boxes on the floor. None of this is optional, and none of it is cheap, even bought used. A realistic equipment package, fully installed and code compliant, adds tens of thousands of dollars on top of the truck itself. And unlike a restaurant, where a broken piece of equipment is a problem, on a truck a broken generator or a dead fryer motor isn't a problem. It's a closed sign. There's no walking 20 feet to a backup station. There is one station, and it's the whole business. This is the section every food truck freedom video skips, and it's the section that actually determines whether the business survives year 2. Start with food cost, which typically eats somewhere around a third of revenue in a well-run operation. And that's before anything goes wrong. Then stack on packaging and disposables, containers, napkins, utensils, cup sleeves, a line item so small per transaction that new owners forget to price it in, until it quietly adds up to several % of revenue by year end. Commissary rent doesn't stop once the truck is on the road. It's a fixed monthly cost whether the truck sells out or sits idle in the rain. Propane refills, generator fuel, and eventual engine maintenance add another layer that restaurant owners simply don't have, because restaurants don't need an oil change to open. Then there's the truck itself as a vehicle, not just a kitchen, tires, brakes, transmission work, the wrap fading and needing a reprint after a couple of seasons in direct sun. A commercial vehicle in daily use racks up maintenance costs that a stationary building never will. Credit card processing fees quietly take a bite out of every transaction. Spoilage from limited refrigeration space means throwing away product that a full-size restaurant walk-in would have kept fresh. And then there's the cost almost nobody prices in until it happens. Parking tickets, towing fees, and the occasional fine in cities with aggressive enforcement against street vending. A cost of doing business that simply doesn't exist for anyone with a fixed address. Festival and event bookings, the very things that look like the biggest revenue days on the calendar, often come with their own fee structure. Either a flat booking fee or a cut of gross sales that can run into the double-digit percentages, paid to the organizer regardless of how the weather or the crowd behaves that day. None of these costs are individually shocking. A generator repair here, a spoiled case of produce there, a parking ticket on a day the meter ran out during the lunch rush. But stacked together, month after month, they form the gap between the truck made great money today and the truck's bank account barely moved this quarter. This is where the romantic version of food truck ownership quietly dies, not in one dramatic loss, but in 100 small ones nobody put in the business plan. A food truck menu isn't short because the owner lacks creativity. It's short because a short menu is the entire business strategy. Every extra item on the board multiplies the ingredients that have to be prepped, stored, and possibly thrown away, and slows down the one thing a truck absolutely cannot afford to be slow at the line. A truck with 6 tightly designed items, each sharing overlapping ingredients, can move a lunch rush fast enough to matter. A truck with 20 items looks generous and bleeds money on both ends, wasted prep, and a line that moves too slowly to capture the full rush before it walks away to a competitor. Pricing works on the same logic as a well-run restaurant menu, just compressed. 1 or 2 hero items priced to anchor the whole board. A combo or upsell that quietly raises the average ticket. And a price point calibrated to feel fair for street food while still covering that roughly 1/3 food cost without the customer noticing the math. Throughput is the real revenue engine, more than the price of any single item. A truck that can serve well over 100 customers in a 3-hour lunch window will consistently earn a more ambitious truck serving half that number with an elaborate menu, because the rent on that parking spot, that time slot, that captive audience, is fixed whether 5 people or 500 walk up to the window. And increasingly, the real marketing budget isn't an ad spend line. It's the owner's phone posting the daily location, And today's special, turning what used to be paid advertising into unpaid hours added onto an already long day. Here's the structural insight that explains why this business model works at all, and where its ceiling actually sits. A full-service restaurant typically needs a much larger staff than a truck. Front of house, back of house. Someone managing the floor, because it's serving a dining room, not a window. A food truck runs on a skeleton crew, often just 2 or 3 people, because the entire operation fits into roughly the footprint of a small bedroom. That's the single biggest structural advantage a truck has over a restaurant. And it's the real reason the economics can work on a modest starting budget. But that advantage has a hard ceiling built into it. And it's this. The cheapest possible version of the business only works if the owner is standing at the window themselves. The moment an owner steps back and hires a full crew to run the truck independently, the labor cost that was free, the owner's own sweat equity, turns into an hourly wage bill that has to be covered by the same limited menu, the same modest ticket size, the same 3-hour lunch rush. A 3-person crew working a 6-hour event, paid a fair hourly wage each, can rack up several $100s in labor cost before the first sale of the day even happens. That's fine. On a great festival day, it's a loss on a slow one, which means the food truck's real business model, in its purest and most profitable form, isn't own a food truck. It's be your own line cook, cashier, and delivery driver, and pay yourself in whatever's left over. Anyone who wants to step back from the window has to build an entirely different, harder, to balance business on top of that. Most first-time owners don't pay cash for a fully built-out truck. They finance it, either through an SBA-backed small business loan, equipment financing tied directly to the vehicle, or in some cases a dealer arrangement with the truck manufacturer itself, because the collateral is a depreciating, heavily used commercial vehicle rather than real estate. The terms tend to be less favorable than a traditional mortgage. Shorter repayment windows and a higher interest rate reflecting the lender's risk. That monthly loan payment becomes a fixed cost sitting on top of every other expense already covered, due whether the truck worked 5 days that week or 2. There's no property tax the way a restaurant owner faces it, but there's commercial vehicle registration, and depending on the state, a different tax and licensing category than a personal vehicle. Another line item that looks small in isolation and adds up over a year. The realistic break, even timeline for a well-booked, well-run truck. One that's landed a steady weekday office park route or lunch spot alongside a healthy festival and catering calendar tends to land somewhere in the 1 to 2-year range before the initial investment is fully recovered. A truck relying purely on street parking and hoping for foot traffic without that steady booked income can take considerably longer to break even. The loan doesn't care which version of the business the owner ends up running. It's due either way. On the same date, for the same amount, whether the truck had a record month or sat in the driveway for 2 weeks with a dead alternator. Ask any food truck owner what the single biggest threat to their revenue is, and almost none of them will say competition. They'll say weather. Rain doesn't just soften a lunch rush, it can erase it entirely, because unlike a restaurant with a roof and a dining room, a food truck's entire business model depends on people being willing to walk outside and stand near it. A single rained-out weekend during festival season isn't a minor dip. It's a chunk of a month's revenue, simply gone, with all the fixed costs, the loan payment, the commissary rent, the insurance, still due on schedule. Seasonality compounds it. In colder climates, winter can mean months of sharply reduced revenue unless the truck can pivot to indoor markets, catering, or private events to fill the gap. And not every truck or every owner has built that flexibility in. Then there's the risk that's mechanical, rather than meteorological. A breakdown. In a restaurant, a broken piece of equipment is an inconvenience. Work around it. Fix it next week. On a truck, the vehicle and the kitchen are the same object. So a transmission problem, or a dead generator, doesn't just slow the business down. It closes it sometimes for the exact week a big booked event was scheduled, with no way to substitute. Add a failed health inspection, a lost parking dispute with a nearby brick, and mortar competitor, or a popular event that suddenly stops inviting food trucks back. And it becomes clear, the business isn't actually as recession-proof or weatherproof as the thumbnail promised. It's exposed to more variables than a fixed address ever is, not fewer. So what does this actually look like 3 years in? It splits roughly into three outcomes. The excellent outcome belongs to the owner who treats the truck like a business from day one, locking in a steady weekday office park or business district route for reliable baseline income, building a genuine catering and private event pipeline. On top of it, and using the festival circuit as high-margin bonus days rather than the whole strategy, that owner can end up taking home a genuinely solid income after a couple of years, sometimes enough to justify financing a second truck and stepping into management rather than the window. The acceptable outcome belongs to the far more common case. The owner, operator working long, physically demanding days, 6 days a week, who nets a modest but real income once every hidden cost is accounted for. It's not nothing, but it's closer to buying yourself a demanding, high-risk job than building the passive income machine from the pitch. The failure case belongs to the undercapitalized start. The owner who spent everything on the truck and equipment, left no cash cushion for the inevitable slow month or mechanical breakdown, and hit one bad season too early. A transmission failure in month 4, a permit delay that eats the first summer, a festival season lost to rain. Any one of those, without reserves to absorb it, can end the business within 18 months, taking the entire initial investment down with it. Same truck, same menu, same city. 3 completely different financial lives. And the difference usually isn't the food. It's the booking calendar and the cash cushion. So who does this business actually work for? Not the person chasing passive income. There's no version of food truck ownership where the money shows up without someone standing at that window, in the heat, at 10:45 a.m. prepping for a rush that might get rained out anyway. This is an owner-operator business first, and a lifestyle business second. And it only becomes something bigger than that for the small number of owners who either build out a fleet, license a proven concept across multiple trucks, or use the truck as a low-cost proving ground for eventually opening a permanent restaurant with the customer base and recipes already tested. The real fortunes in this industry aren't made by the person with the best tacos. They're made by the person who treats a single truck as a first location, not a final destination, and who never forgets that the generator, not the recipe, is what actually decides whether they open tomorrow.